Joining me now, SureVest CEO Rob Luna. Rob, are you buying this notion, though, like this is a massive sea change and all the sexy stocks that led this market for a long time are going to be shunned and you need to be buying the things that have just sort of been laying around?
Yeah, no, I'm not buying that at all, Charles. I mean, I think we've seen this game before, right? And it's amazing how quick psychology can turn. And when it turns really quick. And I think everyone's given up on the names that led us in the past. They're telling you to go into staples, utilities. And I think that's probably, especially if you've got 3 to 5 years right now, the absolute wrong thing to do right now.
Really?
Yeah. Yeah.
Why is that?
Well, I mean, if you look at valuations right now, the traditional value stocks, financials, utilities, consumer staples, everybody is rushed into those names. So those are actually the more expensive stocks. One of the cheapest.
Relative to the way they trade it.
Right, relative.
Which is the point to bring up, because a lot of folks come on and just say they're cheap, maybe compared to the S&P and other sectors, but they're too expensive themselves.
Well, that's a great point. You've got to look at their 5-year average, 10-year average sometime, because not every sector, like utilities aren't going to trade as quick as technology, right? So they shouldn't have that same valuation. But when you look at communication services, for example, and a lot of people, communication services, that's Google, Netflix, Disney, that's trading at 13 times earnings compared to 15 on the S&P that normally trades at 17. So those are your new value stocks right now.
Now, it's interesting because most people just lump them in with tech, but they do have their own niche, and they have been hammered. They have been hammered. Is what's happening there, Meta is now considered a value stock. Google is now in the area that, if you look at the 4 PE, some are saying it's a value stock. But I'm also from the school that a lot of times when a stock gets hammered, there's a good reason for it. Are you suggesting maybe these are just overdone at this point?
Yeah, Google is absolutely overdone. I mean, one of the things also about Google, if you take a look at it, Google's an advertising company. A lot of their advertising has come from travel. Travel did not do too well during COVID, but that's starting to come back with a vengeance now. That's not going anywhere. Now, Meta has some issues. They're going through some transition right now, but I think a lot of that's priced into the stock, Charles. That's a stock trading at 12 times earnings. I don't think Zuckerberg, I don't think Meta's going anywhere.
Maybe Zuckerberg made him, I think he panicked, right? And they shouldn't have changed the name because everyone's focused on the metaverse, which is slow and not ramping up fast, instead of the fact that they still make a lot of money. Let me ask you about the education side, because you're known, right? You've got a huge following. You help people, you educate people. Is there the same kind of vigor out there, the same kind of desire among the public to learn how to do this?
Yeah, I think so. And I think especially for stocks right now, Charles. I mean, I think I teach everything, real estate investing. No one wants to think about crypto or any of those things anymore. But when you look at stocks right now, I work with a lot of millennials. This is the first time they've seen a bear market. This is the first time they've had the opportunity to buy companies they use, Netflix, Google, Amazon, especially after the split at affordable prices. So they're not as dumb as a lot of people say, the dumb money. They're interested, and they're looking now at a discount and saying, this might be my once in a 10-year, once in a 20-year opportunity to get in stocks. But here's the problem, Charles, and I heard you say this one time before. When you look at traditional financial media, it's like a bunch of guys talking to themselves in a room. They're not relating to the people. They need to be educated in a way that's jargon-free, that's teaching them, like, buy what you earn, understand the basic fundamentals, and give them that education, because this is the biggest generation in U.S. history, that we need to change this financial literacy problem.
I'm glad you're out there doing it, because honestly, it's one of these things where I think the stock market is the greatest money-making machine in history, and these are the opportunities that, when you're in the midst of it, it doesn't feel great. But like you said, 5 years from now, people are going to be looking back like, golly, I could have got one of those watches like Rob if I just did the right thing. All right, my man.
Thanks, man.
See you. It's great seeing you.